Do you ever wonder when you're looking at the crypto markets, what happened to the top 100 that was there in 2017? Did most of these coins die? Yeah, they did. But what I'm going to be doing in this video is tracking these top 100 throughout the years and seeing what happened. So most of these coins fell off hard. Like you probably don't recognize a lot of these down here. What would have happened if I, for example, put a little bit of money into all of these coins? Would I have lost money overall? Would I have gained money? Would I have gained more money than just buying Bitcoin? Who knows, right? This will give us some insight into what strategies we should be deploying in the present moment. And yeah, screw technical analysis because that stuff doesn't work half the time.
Oh, and here's my data, by the way. Maybe I'll upload this. But I basically just took the top 100 from 2017 and then tracked them through 2-year increments up until present 2023, end of 2023. I chose 2017 because 2017 is the top of a bull market. And then I also chose tracking from 2019 because 2019 is approximation of the bottom of the bear market at that time period. So from there, we get to see what happens when you buy at the bottom of a bear market, what happens when you buy at the top of a bull market. Do you make your money back at the next bull market? Who knows? All right. I know that was a lot. This is the fun part. So here we are comparing the top 100 from 2017 and seeing what happens by the time you get to 2021. So if you invest evenly across the top 100, so like let's say you had $10,000, you could put $100 into every coin, from Bitcoin all the way down through the 100th coin. If you did that, the mean return, meaning your total return of that entire portfolio, would be 109%. So you double your money from 2017 to 2021. However, the median change would be a negative 83%, which means that most coins actually lost value, but some select coins went up enough to offset the mean, so you'd actually get a doubling of your portfolio value still. This is important to note because that means if you just randomly select a coin from the top 100, there's a very high probability that it'll lose money. However, if you're well diversified, for whatever reason, in general, the crypto market goes up, meaning that you actually gain money. Okay, what happens if you spread it evenly across the top 50? So now you're in bigger cap coins. You will get a higher return. In the top 25, you actually get a negative return. It's really weird, but here in the top 25, for whatever reason, the coins ranked from, what was this, 2017 to 2021. By the way, this is what we're tracking. So for whatever reason, from coin ranked 11 to 25, all of these coins, for the most part, I think like one or two, maybe Tron, lost value. So that's why investing in the top 25 from 2017 at least would have lost you 21% of your portfolio value in those 2 years, or in those 4 years, 2017 to 2021. Investing in the top 10 coins, you would get a total return of 31%. So again, the median coin lost value.
If you invested across the top 5 coins, which at the time in 2017 would be Bitcoin, Ripple, ETH, Bitcoin Cash, and Cardano, you would have had a total return by 2021 of 121%, and your median percent change would be 88. Finally, if you just invested in Bitcoin, you'd have a total return of 252%, and obviously the median is the same because you're only tracking one asset. If you notice across these strategies, Bitcoin wins. Bitcoin's the best. The second best is across the top 50, then across the top 5. So it seems like there's no true best strategy because top 5 and top 50 are very similar. Top 100 actually did pretty well. I think it might be smart to do some diversification, but remember, this is buying at the top of a bull market, 2017. So that the reason that's important to note is because Bitcoin tends to fall less than other coins. Here, let's look at what happens by the time you get to 2023. So if you invest in the top 100 in 2017, by 2023, you'd have a total return of only 21%, which that's 6 years. And you basically didn't beat inflation. So, not good. Top 50, you get a 39%, and the median's still negative. Top 25, sorry, You get a negative 35%, horrible, and still a negative median. Top 10, you still lose money. You're negative 10%, but it's slightly better. If you do the top 5, now you're in profit. Now you're up 52% over 6 years, which isn't even that good. That doesn't even beat the S&P. And the median's still negative. So in the top 5, the average coin was still a loss. And then finally, just Bitcoin, 218. Bitcoin's the best. Bitcoin wins over a long time period. But again, note, this is buying at 2017 tops, which means that it's going to be different if we switch to a bear market. So let's start with the 2019 data and see what happens. Here's 2017, like end of 2017, what I was collecting the data from in the beginning. And you can see it's kind of a peak. Now we're tracking from the end of 2019, which is kind of like in the middle of this bear market period. And we're going to see what happens to the strategy in a buying in a bear market period. So if you diversify across the top 100 of 2019, which is going to be a different top 100 than 2017, by the time you get to 2021, you have a return of 1,016%, and the median return is positive. So that means that you could basically buy any coin, and on average, that coin will return money, but it's probably better to be diversified. As you see, as you start to allocate less money to smaller coins, meaning you're only in the top 50, your returns actually decrease. Although when you get to top 10, it increases from 25. The top 5 is 814%, and then just Bitcoin is 576%. So out of all these strategies, Bitcoin was actually the worst strategy if you bought in 2019. If you just bought Bitcoin in 2019, it was the worst strategy. Whereas if you diversified a little bit in all the coins in the top 100, you would have done the best. And actually, it's interesting to note that the top 100 did better than the top 50, meaning that if you invested in the bottom 50, you would have done better than all of these strategies. So it seems like in a bear market, it's better to buy low cap coins. All right, let's see what happens if we get from 2019 to 2023. So 2019 to 2023, over a longer time period, it seems like this top 100 starts to decay. Because from 2019 to 2023, your returns are much worse. And the returns seem to get slightly better. Top 25 is actually the best. Yeah, so I guess my point would be if you're thinking very long horizon, you should probably be investing in higher market cap coins. If you're investing in a bear market, expecting this 4-year cycle to continue, the 4-year cycle, if you want to see, is basically a peak. So you can't tell, but in 2013, there was a peak and it fell. So look here, you can see on my page, 2013, it was at like $1,000 and it fell all the way down to like $200 here. So this was a bull market and then long 4-year, long drawn out bear market. And then the same thing happened here in 2017. It seems like approximately every 4 years, there's this peak kind of cycle in the crypto market. This is just Bitcoin, by the way, but it's all correlated. But if you're buying in the bear, it's probably better to actually buy smaller cap coins. But let's go back to our data here to kind of make a point here. If you're buying really small cap, like relatively small cap coins, obviously they're not that small because they're still top 100. Over a long enough time span, so from 2019 to approximately present, 2023, the top 100 appreciates less than just Bitcoin, even though you are buying in a bear market scenario where you expect the lower caps to go up more. So I think the conclusion you would draw from this, if you expect this trend to continue, is if you have a very long horizon, buy bigger cap coins. If you're in a bear market period and you want to sell at the peak of the next bull, then buy smaller cap coins. Yeah. And then also remember, if you're buying smaller cap coins, it's important to diversify because these medians, if you're buying at a higher point, are often negative. And the fact that a median is negative means that an average coin that you just pick out at random is most likely to go down in price. If you like that analysis, subscribe to my channel. Peace.